Good afternoon, everybody. I believe we are live here. This is Brian Shannon from AlphaTrends.net, and today is Wednesday, January 19th, 2010. And for my favorite emailer, here is a quick reminder of what an uptrend is. What I simply did was went into Google, typed in uptrend, and you can see the definition of an uptrend is higher highs and higher lows. So if you're confused about what an uptrend is, here's what it looks like in a real-time daily chart. We're looking at the S&P 500. This daily chart of the S&P 500 has a pattern here that is exactly like the pictures we were just looking at here on Google. That is, we're looking at higher highs and higher lows. It's pretty simple. Okay, so we're in an uptrend on the daily time frame. That's obvious. On a one day today, well, we had some selling today, and the market was below the volume weighted average price all day, and we had a pattern of lower highs and lower lows. So what your definition of trend is depends on which time frame it is that you're looking at. When I look at the market, what I'm looking for is what is the primary trend, looking at a daily and even a weekly chart. And on the weekly chart, we can see what? Do we have a pattern of lower highs and lower lows? No, we do not. What's the definition, what's the direction of the moving averages? The 10, 20, 30, 40-week moving average, all heading higher. What is the direction of the moving averages on the daily time frame? Well, we're looking at a 10, 20, and 50-day moving average, and they're all heading higher. We haven't even closed today below the 10-day moving average. So we are in an uptrend. Now, I know you're going to send me another nasty email that says, well, the top was made or whatever, but I disagree. I think there's no sign of a top here. We've got a market that we know has been extended, and it's been providing us with some terrific upside opportunities. And now we're seeing that the market's in earnings season, and we're getting some mixed results, but generally positive here. What's more important than the headline number when it comes to earnings reports is the market's reaction. So if we take a look at, for instance, IBM, it's up at all-time highs here. There's nothing less bullish than a stock at all-time highs. You can't be bearish IBM. To me, you're a fool if you're bearish IBM when it's making all-time highs. It doesn't mean that this is the ideal entry point, though. What our job is as traders is to recognize a trend and then ask ourselves two questions. Where has it come from? Well, the stock has just rallied from 146 to 156, so it's just rallied 10 points. And where does it have the potential to go before it's likely to encounter a source of supply that will slow it down, and that area becomes resistance, because at that point our upside target becomes diminished. Well, in IBM at an all-time high, there's no way of telling except unless you're going to use the measured move or some Fibonacci and that sort of thing, and we're not going to get into that right now. We're going to keep the analysis simple. Our job is to manage risk, and if we're going to be trading IBM, I think that you want to look at what time frame do you consider the higher low? Well, if you consider this higher low right in here at about 155, a prudent approach would be to be long the stock with a stop below that 155, 154.75 area. But the point is, again, we are in an uptrend, and stocks like IBM are proving that. Apple is still in an uptrend. It's getting pretty volatile here, obviously, but prior resistance held as support. That year high late last year held yesterday, and now we're getting, we've got the earnings out. It's below the 2-day volume weighted average price, and we've got you've got to consider, is it worth taking a new position in Apple? That's up to you to decide. And if you do, well, does your stop go below that 325 level, 326? Again, that's up to you. But the point is to find the stocks that are comfortable. Look for stocks like Hansen that are breaking out to new highs, and then determining, do I stick with that breakout at 54.75? It's been rejected twice through that level right now. So you can buy a new high, as I was talking about Hansen on Friday, that you don't want to buy after it becomes extended. Instead, what we want to do is we want to always look for a pullback and then buy the fresher high. That is, we got that pullback, and then buy over here, but then protect it with a stop. Our job is to manage risk. If you're trying to pick a top, you're playing a completely different game than I am. Quit bothering me with your tweets, your emails, and all that, because I simply don't care. That's not the game that I play. There's a lot of different ways to make money in the market. My analysis, you can disagree with it all you want, but I'm not into the intellectual arguments. To me, the market isn't an academic exercise. I forget who said this. I'm quoting someone here. The market isn't an academic exercise. It's an economic reality. And if I try to pick the top in the SPY, that's fine. Go for it. That's, if that's your strategy. But not many people have made money short in the SPY over the last 6 months. Now, do trends end? Of course they do. So we want to monitor the shorter term time frames and look at it and say, well, what are the important levels? Well, let's take a look together at a 30-minute time frame. We can take a look in here and we can see that we've got this trend line that's still intact. We've got these prior highs from earlier in the year. This prior resistance at about 127.80 seems to be holding as support. Now maybe you could make a case that maybe we're going to make a lower high, and this will be a head and shoulders pattern. Fine, just manage the risk on whatever that trade is. What we can do is also take a look at the volume weighted average price. Since the beginning of the year is an important representation of psychology, and you can see that level is just below at 127.75. So I think on the SPY that you generally want to give the benefit of the doubt to the buyers from a swing trader's perspective. Now, day trading perspective, obviously, that's a different story. Define your time frame. But when looking at the bigger trends, here's the volume weighted average price year to date. That's also a prior important level of resistance. So if we break below that, then perhaps we're going to get a little bit deeper pullback. And then what we want to look at is what's the next potential level where support would be found if this level is broken. Well, we've got a 20-day moving average down near about 127, and we've got this prior resistance here at 126.20 that held as support this year. So, if we rally up, make a lower high, and we break 127.75, I think it makes sense to get more defensive. The market, I said this in my Monday night webinar for subscribers, I think the market is going to start getting a lot more selective now that we're in earnings season, and that we've seen a lot of these little stocks making these crazy moves that have been a blast to trade. We finally got stopped out of this RAS today from a the entry in RAS was about a week and a half ago, down at $2.30. Well, today, again, what's the definition of trend? Higher highs and higher lows. So why did we get stopped out today? Because it made this lower low right in here. It broke support. So that's the time to move to the side. It doesn't mean sell short. Not in my mind. It means move to the sidelines, because the primary trend on the daily time frame is still higher. You can look and say, well, it's broken, whatever. Trade the way that's comfortable to you. I like to look for, what I call the alignment of trends. It's in a daily uptrend and it's in a shorter term uptrend. It's not too far extended. It's at a place where I can make my purchase as the momentum builds, set my stop under the most recent higher low, and raise my stop up underneath as the market makes higher lows from there. It's really pretty simple. I just, some people just try to make it so damn complicated. And like I said last week, I've been guilty of buying some puts that expire on a Friday, on a Tuesday, not this week, but you look at it and you perceive different risks. You look at the market today, and all day long the sellers dominated. We saw it with the fact that the market was below that declining volume weighted average price, and we have now, here we have the advanced decline line. All day we were better than 2 to 1, two decliners for one advancer. That's not the sign of a good market intraday. So define your time frame. Anyways, the Nasdaq, is this still an uptrend? Definitely. There is no sign that it looks different than anything we see here on an uptrend chart. And it just astounds me the way that people argue. Anyways, 5507 was the bigger level from 2007. I don't think that's the most important level. We're undergoing what looks like a little bit of profit taking within an uptrend. We haven't seen the profit taking for a little bit in here. The Nasdaq right down to this trend line that's basically from the beginning of the year. Is it going to bounce and make a lower high and then break down through this level here at about $56.30? If it does, it's time to get a little bit more defensive on the Nasdaq stocks. There's no way you can look at this and say, hey, it seems like it's pretty extended. But again, we came off a pretty tight consolidation through time, basically in December, and we're still above a rising 10-day moving average. The 10-day moving average is above the 20-day moving average. The 20 is above the 50. They're all heading higher. The Russell 2000 a little bit weaker, down 2.5% today. As I said earlier in the year, this is our bigger. These lows will be an important area down in through. Basically 77 and a quarter to 77.50. That to me is a bigger level of support, and maybe we see the 50-day moving average rise up and meet that. Markets can correct through time and price. Right now, there's no evidence that the bigger picture trends are diminished in any capacity here. We've got, we came up to a level where we've seen prior resistance, and we see this market could continue higher. Right now, however, it seems as though it got a little ahead of itself. We broke some support in this Russell 2000. So the Russell's a little bit more damaged, and it's been choppier than the rest of the markets this year. If we take a look at the volume weighted average price of the Russell 2000, you can see that we're below that. So it's really a bigger battle in some of these mid-cap names, and the mid-caps led the market higher. So we have to, be aware of that. But still, until we show a definitive pattern of lower highs and lower lows, you can't be bearish for very long. For an intraday trade, awesome downtrend throughout the day today. This is a 1-minute chart. We've got the pivots that broke below all those levels. We've got the declining volume weighted average price, and the market closed on its lows. Does it make sense to sell short here? No way. I would be looking for a rally that fails, maybe up near, if you're looking for short exposure, up near this prior important level. Resistance became support here. So maybe we get a rally up to that. The 5-day moving average comes down to meet it. And you don't want to sell short the strength, but instead, if the market, encounters resistance, sell it short as it comes back down through that level, and then protect yourself with a stop if that's the game you're looking to play. And there's nothing wrong with that game. The semiconductors, are these in a downtrend on a daily time frame? Not a chance. They're entirely in an uptrend. They've gotten extended. We broke that we'd broken the primary trend line back in December. A lot of people got bearish. I was saying, corrections occur through time and through price. This was a time correction. We broke out, and it's extended. There's no doubt it's extended. If you want to trade counter to the primary trend, perhaps you're going to pick a top, but I don't think it's appropriate to go in and think that you're going to pick the top. If you're going to be short the semiconductors, what you can do is you can say, okay, maybe I'm going to short it below this level with my stop up here. And if the market keeps breaking down and you lower your stop, maybe in 2 months, 3 months, you look at it and you say, hey, I picked the top, congratulations. But let it be a function of the market validating your idea rather than you forcing your opinions upon the market and stubbornly shorting it every time and saying, "Oh, this is stupid. It's up too much," etc. It just there's no point in that. And I'm hammering this for a reason. But the financials, are we in a downtrend? Does this look like a downtrend? I mean, just objectively, is there anyone here that looks at this daily chart and says the financials are in a downtrend? Maybe you're doing a handstand right now. I don't know what it is, but we still have a clear pattern of higher highs and higher lows. On the daily time frame, the market's innocent until proven guilty. People say, "Hey, should I buy the breakout here?" No, you want to buy after these consolidations through time and price, as the market becomes aligned once again in these levels here. You don't want to buy at the pullback, because what if the pullback is the top? Nobody knows, but what if it just keeps pulling back this time? What we want to do is we want to see the market instead stabilize and then begin to emerge back into an uptrend. And then when the daily time frame is up, I don't think, unless, for shorter term traders on a daily, hey, go in and buy, go nuts on the FAS if that's, if that's what you want to do. I mean, here the FAZ, you got a good strong trend move throughout the day. So again, define your time frame. That's the most important thing, is what time frame are you trading on? So back to earnings. We saw earnings from IBM, very well received. Apple, there's just a lot of news in that. I think Apple's just got too much emotion in it right now with the Steve Jobs news and with the earnings. And I think it's probably best to stay away from it for a bit. I personally don't enjoy trading that stock, but wanted to mention because a lot of people ask about it. Cree, is another example of the dangers of earnings. Okay, so we had Cree report. The stock was down 3 days prior to that to the 50-day moving average. I'm sure there were people in there buying the stock, buying calls, saying, "Hey, it's going to bounce from the 50-day moving average because it's innocent until proven guilty with a 50-day moving average." But you have to assess risk and say, get the hell out of the way, unless you're going to, maybe buy some speculative calls and think that 50 days is going to hold it. Buying in front of earnings, to me, it's gambling. That's not the game. That's not the game I play either. So we were talking also about Dendrion. Dendrion needs to clear this bigger level really to get going, up at about 39 and a quarter. And I was talking about it last week that this shorter term time frame, it looked like maybe it was going to be able to get going above 37.50. Instead, we had that shakeout. We had a rally back up to 37.50. It also found resistance at that declining 5-day moving average. What I was looking for, what I would have preferred, what I was anticipating trading, was not to buy pullbacks in the stock, but instead watch it find some resistance at 37.50, pull back, make a higher low like this, and then that 5-day moving average, cross the 5-day moving average, the 5-day moving average starts turning, and then as it begins to break out, that's where you want to get involved, is kind of a cheat buy in front of that bigger level at 39 and a quarter. But anyways, that's a look at some of the stocks that have been active in here lately. And, again, I think the main thing that you have to look at in this market is, are we in an uptrend or a downtrend? How do you define trend? It's real simple. Technical Analysis 101. Higher highs and higher lows. What are the direction of the moving averages, the path of least resistance, and then get comfortable with the time frame then take your analysis to the time frame that you're comfortable with, and then look to say, do I want to buy into this weakness? Do I want to buy at a level that I perceive will be support? Personally, I don't like to buy on those pullbacks. I don't like to buy here. You can do it, but I prefer to see it kind of settle in and then reemerge into that pattern of higher highs and higher lows. To me, it's kind of, we have mixed messages on these time frames, and you've got a good time to just continue to focus on the individual stock names, and just always, 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 our number one job as traders is to manage risk.